Hello friends, let's cover tweezer tops and tweezer bottoms in this particular video, which are very important reversal patterns. Tweezer tops and tweezer bottoms are candle formations where you have matching highs or matching lows. If we are talking about tweezer tops, we have two or more candles which have matching highs. And if this kind of a formation is existing during an uptrend, it signifies that the uptrend might pause or convert into a period of consolidation or downtrend. Conversely, in case of tweezer bottoms, you have two or more candles with matching lows. And if you have this kind of a formation during a downtrend, it would mean that the downtrend may pause and may convert into a consolidation or uptrend. Do note, whenever you have a tweezer top or tweezer bottom formation, wherein the first candle is a long body candle and the second body is a short body candle, that has more significance as compared to other scenarios. So let's look at an example to understand this better. As you can see on my screen, on the first example, the stock is in a visible downtrend and then you have a green candle which is formed here having a matching low. This is what is known as a tweezer bottom. Similarly, in this particular example, the stock is going up and you have a bearish candle with a matching high. This is known as a tweezer bottom. If the first candle is a long body candle, the significance of the candle formation is more prominent as compared to two short body candles. Taking an example to explain this better, on my screen I have the chart of Cipla on a weekly time frame. And as you can see, the stock is in a visible uptrend and around this zone is where I see a tweezer top formation in place. A huge green body candle followed by a red body candle with almost matching highs. This is the indication that this uptrend may pause and convert into a consolidation or downtrend, and as we expected, the stock price came down to make a new support. Similarly, if you notice this section, the stock price went up. There was a huge green body candle followed by a red body candle with matching top. This is again a classic tweezer top formation, and as expected, the stock prices came down. If you look at this diagonal trend line that I have drawn, this would have probably given you an entry somewhere around 620 zone, but using the candlestick analysis, you were able to spot a reversal around 700 levels. So this is how candlesticks added a flavor or a dimension in your trading and investment decision making. Let's look at this example for a tweezer bottom. Again, I have the chart of Cipla on a weekly time frame, and as you can see, the stock was in a visible downtrend forming a lower top, lower bottom, lower top, lower bottom formation. Around this zone is where I see a matching bottom, wherein the large red body candle is followed by a green body candle with matching bottom. This was my first indication that the bear grip might be weakening and the bulls are trying to take control back from the bears. And as expected, the stock price started going higher from 570, 580 odd levels and made a high of 720, 700 odd levels. The Western technical analysis would have given you an entry around 590, 600 levels, but the candlestick analysis added another dimension or flavor in your trading journey. Now, in the context of tweezer tops and tweezer bottoms, let's look at a slight variation of these patterns, which are known as dumpling tops and fry pan bottoms. In the case of tweezer tops, we are looking at two candles with matching highs, whereas in case of a dumpling top, we are looking at two or more candles with matching highs almost at the same zone or same level. And conversely, in case of a fry pan bottom, we are looking at three or more candles having a matching bottom similar to a tweezer bottom formation. Always remember, a gap up or a gap down opening around these kind of candle formations has more prominence. So on my screen, I have the chart of TVS Motor on a monthly time frame, and as you can see these highlighted sections, we have almost matching tops in these bunch of candles, hence a dumpling top formation, and as expected, the stock prices started cooling down. A dumpling top formation followed by cool off in the stock price, and a dumpling top formation followed by cool off in the stock price. Similarly, again on the chart of TVS Motor on a monthly time frame, these are three areas where we had a fry pan bottom formation. That is, we expected an uprise in the stock price, which happened here as well, and which happened here as well. So, as we understood, the fry pan bottom and the dumpling top are slight variations to the tweezer bottom and tweezer top patterns. So I hope that you found this video informative and you are able to now practice identifying these patterns on charts across any asset class. Do remember, you start your practice on higher time frame charts and gradually come down to lower time frame charts. That is how you'll be able to master these concepts. Thank you and good luck.